You were listening to chartingwealth.com for Tuesday, the 19th of January, 2016. We always start with IYY, and how did it end up the week on Friday? Down, down, down. Another 2.18% down for the day. Now, we always look at our two-day candles. We use a big chart and a small chart to help us in our charting decisions. Our big chart is a two-day chart, and we have connected 5 down two-day candles, and we see massive down movement since the markets opened back on the 4th of January when the new trading year began. Biggest down opening that we've seen in the stock market. Huge down movements. And what we're looking at with IYY is the total market. It's an ETF, an exchange traded fund that tracks the whole market. Now, if we go and we look at our 4-hour half-day chart, we can see that we thought we might see a bit of a crossover going up maybe on the 15th to help us find a good entry point if we wanted to make money as the market moved down. That is shorting the market, that is buying an inverse fund. And again, here we're talking about doing that virtually because we don't give trading advice. We don't get paid for that. We are not in the business of doing that. We're in the business of teaching you to learn how to trade. Then you can make your own decisions. So what happened? Well, the market rolled back over the morning of Friday the 15th, up a little bit in the afternoon, but still major down day with all the bad things weighing on the market. We have a two-day trend line. The market's still well below. So total market, strong down moves. We are waiting for an up move at some point to give us potential entry points for further down moves. We don't have them yet. Of course, where was our premier entry point? Right there on the 4th. There was a good entry point right at the end of the day on the 31st of January and right at the beginning of the market on the 4th. So don't know if any of you got in or had previously gotten in to down trades. Of course, the market had told us it was going down when? Well, all the way back on the 4th of December when it crossed over going down on our big chart. Then it slid sideways and then continued the movement. No surprise for those of you who actually read a chart and don't listen to the talking heads. Now, let's take a look at SPY, see what it's doing on the two-day chart. Looks very similar to IYY. Again, strong down moves, derivative oscillator, strong down. The MACD, huge separation between the red signal line and the blue moving average convergence divergence line, continuing to diverge further. Big, strong trend line going down, 5 candles connected. If we look back at our 4-hour chart, what do we see? We see almost crossed over going up and then rotated back over. So didn't have an entry point there. We talked the other day about looking at the 2-hour chart. But again, if one looks, you can see how much it swings back and forth, which makes it very hard to make any good entry points. And what do we want? Well, the biggest thing we want to try to do is preserve our own capital, right? We don't want to lose money. Then second, we want to make money. Well, you don't make money taking big risks. We are not professional traders. We don't have to trade, right? We don't have to invest. We want to wait for the perfect time to make the best moves. Otherwise, you keep it in your virtual account. You stay in virtual cash, as it were. Now, let's keep moving. We're going to go back to our two-day chart. And what do we see with the Qs? Now, the Qs was down the most. The NASDAQ and the S&P 500 and the total market were down about 2.15, 2.18%, but the Qs was down 3.10%. Those are the tech stocks, the NASDAQ 100, huge down moves. Now, if we look back at our 4-hour chart, what do we see? Again, an uptick on the 13th and the 14th, almost crossed over to give us an end point, rolled over hard that last day of the week last week. So, again, strong confirmed down moves on all 3 of our indexes. And unless that abates, we get a day or two of some up movement and crossovers on the 4-hour charts. We don't have any entry points unless you had gotten back in right as all this was occurring, as our charts had told us was setting up. Now, that's the value of reading a stock chart and acting. Now, lastly, let's look at what's up with gold. Gold continues our 4-hour chart. our 2-day chart crossed over going up back on the 14th of December, and then slid sideways for a while where the MACD doesn't help us a lot, touched the bottom that we had put into our chart on a purple line, about $100.50, something like that, and then bounced off strongly starting on the 5th of January. We see on the 7th, and we see on the 11th it started sort of petering out, crossed over the little bit of a trend line we had drawn. But as we talked about over and over again, we prefer our 4-hour chart. Let's see what it was telling us. Well, 4-hour chart crossed over going up on the 4th of January. That was a good chart. Then it started sliding sideways, crossed over going down on the 12th, and did pretty well all the way down to the afternoon of the 14th. Then it popped back up again and then sort of slid sideways. So what do we have going on? Well, gold was up 1.03 as the other indexes crashed, as one would expect. Don't yet have a crossover on the 4-hour chart, so that's not yet been confirmed. Gold, again, down on the 4-hour chart, and gold itself is in a long-term uptrend on its 2-day chart. So what are you looking for in gold? Well, if you wanted to try to find a virtual entry point, you want to see gold cross over on the 4-hour chart to confirm the same direction that it's currently been moving on its 2-day chart. Because remember, we always want to trade in the direction of the big trend, the big chart, like this 2-day chart. Hope that that is helpful for you as you get into the new week, a short week, starting on Tuesday, the 19th of January. Thank you so much for listening to us. I'm about to record our weekly review and forecast, so if you haven't heard that yet, be sure to tune into that also. If you want to learn what all of this chart reading is about and how you can start virtually trading in the market and figuring out how to make money, how to invest, you need to sign up for our daily podcast. With that, you will get the charting layout that we use at freestockcharts.com. The operative word there is free. It is our charting wealth layout. We'll send that to you along with a link to our 15-minute How to Read a Stock Chart video, which is what you need down and dirty to learn what stock charts are all about and how to start reading them, because they are your roadmap to the future, to profits, to successful investing and trading. Thanks so much. Appreciate you joining us from chartingwealth.com.